PayPal's stock sentiment is absolutely atrocious. It's disgusting. It's at an all-time low. We're going to speak about that here today. I did a little experiment this weekend. I want to show you guys the results. Moral of the story is this sentiment around PayPal stock is awful right now. Second thing we're going to get into is a little housing market update. I want to talk about housing market. It matters for the stock market and kind of what's going on there. I want to share some basically data in relation to that. And the third thing that we're going to talk about is best stocks to hedge against. And obviously the market in general has had a pretty nice run over the past almost year and a half now at this point in time, right? And so if you're looking for some hedging opportunities, I want to speak about a few of those in this video here today. Okay, so those are three subjects we'll get into. Appreciate y'all joining me as always. Thanks so much for being here. All I ask in return is that you like this video and make sure you're subscribed here to the channel so I can continue to provide this content for you guys. On Wednesday after the bell, I'll be doing a big Twitch live stream. If you want to join me for that, make a note in your phone, write yourself a note, whatever you got to do. And the reason being is NVIDIA's reporting after the bell that day. On top of that, Rivian, Etsy, Cheesecake Factory, and Dutch Bros plus Lucid all reporting after the bell. But obviously, we're really paying attention to big dog NVIDIA. So yeah, that will be on Wednesday, okay? So less than 48 hours from now. So I did a little post, and I posted this out there, and I posted this on Threads at first. I said, PayPal, over $100 at this time next year. What do you think? And the reason I picked $100 specifically is that would put PayPal, let's assume PayPal doesn't have any massive increase in its profitability this year, in 2024, right? That would put it at about a market multiple. Let's call it around an 18p ratio, somewhere around there, right? Which is right in line with the market, which is not something special. That's just like, you're a boring blah stock if you're trading at a market multiple, okay? So that's just PayPal being respected as a boring blah stock at that point in time, right? So I was curious, what would people's reactions be to this, okay? PayPal is old internet. The future is elsewhere. Possible, but they're going to need to change the narrative with an earnings beat. Moral of the story, no, that's not factual. This is a problem. A lot of people throw out opinions without knowing facts. And I've found this time and time again. 90% of people have an opinion, but they don't base it on any data or facts, right? The bottom line is the last 2 quarters, Alex, Chris, and PayPal have beat on revenue and earnings per share. In the latest quarter, they beat substantially. Okay, I like the price right now, but the growth slowing is somewhat worrisome. Not factual again. Once again, 90% of people have an opinion, but it's not based on facts. Okay, PayPal's growth is now accelerating. Look at their revenue growth. Look at their total payment volume growth. It's now accelerating. Accelerating. They might need to move into an income company rather than growth company if they can't turn it around. Turn it around, okay. I've been patient since last 7 months, can't hold more than 4 months. It's never go over 100 in short term. It's a good bet if you have a lot of money just sitting there. Okay, interesting. PayPal has declining growth, not factual, but if you want to throw non-facts out there, you can. You have many good stock picks. This isn't one of them. Get out before you have another tattoo chef situation. You flipping my flapjacks here? You flipping my flapjacks? No. Wait. No. You can't. PayPal tattoo chef? You can't put those two in the same sentence. Come on, let's just stop it, okay? Let's just stop it. That, if you want to know, and that had 4 likes, which, by the way, 4 likes on Threads is actually a lot of likes because that platform is not all that popping. Let's just put it that way, okay? Listen, if you want to put them in a bankrupt company category, it gets no worse, your sentiment, than that when people are putting you into a category with a bankrupt company. That's as low as it gets. It gets no lower than that, okay? No flipping flapjack and lower. I can't even, it's not even worth me addressing that. Come on, PayPal, come on. Flip my flapjacks. Nope. So many better leaders and stories out there. With Apple Pay and Google Pay, what edge does PayPal even have anymore? Well, you could said that same thing about the past 10 years, because Apple Pay and Google Pay are nothing new. They've been around for about a decade, and yet PayPal's done just fine over the years. Look at those numbers over the past 10 years. No, just because they announced something with AI. Oh, gosh. PayPal is a complete dog. Hey, that's fair. If you want to call PayPal a complete dog, you can do that because that's actually factual. PayPal stock has been a complete dog stock. Look at that stock. Over the past year, 2 years, 3 years, 5 years, pull up all of them. Yeah, it has been a complete dog. You're right about that. Finally, somebody at least said something with facts behind it. I appreciate that. Take the losses and move on. Nah, this person says. So I said, okay, that's Threads. Let's post the same thing on Twitter, otherwise known as X now. And let's see what happens there. Same exact post. What did I get in return there? Let's see. Well, honestly, I'm going to say no. I personally don't like the platform. And whenever I say to someone, let's Venmo, they say, let's use Zelle. Stop it. Okay, just knock it off. No one ever says that. Come on. Just stop it, okay? I mean, some of these are just ridiculous. I just have to sit back and laugh at it, okay? No one ever said, give me a flippin' flapjack and break, okay? Just knock it off. If you're going to do a transfer of money, there's two things people offer, okay? And it really depends on what your income bracket is and who you associate with, okay? There's Cash App and there's Venmo. Cash App and Venmo, okay? Now, if you are more of a somebody in college, if you are somebody that's maybe a business professional, Venmo is much more likely. If you're somebody that, let's say, is in illegal activity, Cash App, okay? So it really just depends on who you're hanging with, what crowds you kind of associate with, and those sorts of things, okay? So stop it with the Zelle. Just knock it off, okay? Depends on earnings and growth in the next 2 to 3 quarters, okay? Zelle is fair if it's like a business like transaction maybe, then you can understand Zelle. That's more popular for like that. But transferring money between friends and family, like, come on now, come on. This person says, nope. This person says, X payments will come in with 10X better product and cheaper. Wins the game. Okay. We'll see if X even ever comes in with the product. Never mind, comes in with the 10X better product. We'll see about that, okay? That's a whole other big statement in itself. Somebody says, sorry, I do not believe that. This person says probably $25 a share. So basically this person's expecting minimum 50% downside for PayPal from here. Okay. Somebody says still got time to swap this dog stuff for Coinbase, Jeremy. Okay. Swap it for Coinbase. All right. There we go again. PayPal's the next tattoo chef. Get out while you still can. They have no moat. Whew. Well, some things are not even worth addressing, right? It's just there to show you how bad this sentiment really is. This person says, nah, I doubt it. This person says, probably 10 comes first, so they're saying $10 for PayPal. This one says, sorry, Jezza, nothing special about PayPal, never was, never will be. I can't understand why anyone would FOMO in. I don't understand why anybody would FOMO into PayPal. No one would FOMO into PayPal unless the stock starts running big. If the stock starts running big, then people might FOMO in. But right now, like the stock's been in the 50 to 60 range for a long time now, it seems like, right? So there's not even at the point of like FOMOing into it, right? You need to have a big run. Like, for instance, Nation of Palantir here, right? Palantir, for a long time, no one would FOMO into Palantir, right? In 22, into beginning of 23, people didn't really start to FOMO into Palantir until really the back half of last year, and obviously the beginning of this year. Palantir is like kind of in more of a FOMO cycle recently, I would say that, right? Like PayPal, it's not even for consideration for FOMO right now. This person says, no, because I don't use PayPal anymore. This person says, well, that was something about option related. This person says, I think you have a lot of dead money sitting there. Sell some calls here and there for more premiums. Use those premiums to buy more shares. Not a bad strategy. Not a bad strategy. There's a lot of people that tell me to sell calls all the time. I'll be honest with you guys. There's a lot of people, telling me how much money I could be making selling calls. So I can't disagree with that one. Okay. And by the way, that one got 9 likes. So a lot of people like that. This says, I'm selling once it hits 80. And that definitely shows you something very important, right? That shows you that there's a certain amount of people that are in the stock that just are looking to get out, right? They're just kind of hoping it goes up. But those people, if it doesn't go up in time for them, they'll get frustrated and they'll sell out before it ever hits the 80 or whatever price it goes to. So that's something to kind of keep in mind there. And that's probably been a lot of the selling pressure for the last 6 to 9 months in regards to this stock. It's just people get frustrated. They're just like, hoped it would go up, it wouldn't go up, and they're just like, I'm done with this stock, I'm out, right? And that's fair. Like, some people just get, fed up with it. Though you can't say anything bad about the numbers, though. If you're selling just because the stock price won't go up short term, that's usually a mistake. If you're selling because the fundamentals of the company have gone bad, the numbers are horrible, that's fair. But that's just not the situation in regards to PayPal, right? This person says, it's a failed company, no one uses it. Once again, not based upon facts. PayPal's the biggest, okay? PayPal and Venmo dominate. But, once again, if people just want to throw out whatever false statements, they can throw out false statements, right? This person says, no, that is not going to happen. Let's come back and see next year. This one person says, no chance. Reverse split, which is like a very, very bearish thing to say. But this person says, range bound, $80 to $90 next year in frustrating months-long channel. This person says 100% no. Dead money, sell it. The model is broken, right? So you see now, the sentiment is awful. And by the way, not every single person is bearish on PayPal. There were a few people here and there that were bullish on it, whether it be on X or whether it be on Threads. But the overwhelming consensus feeling is, gosh, people are bearish on that stock. And man, is the sentiment just awful in regards to it. Now, the next thing you have to ask yourself is, if sentiment is very poor on a stock, does that mean the stock is likely to perform very poorly, right? And I think that's a fair question you got to ask yourself. And so let me take you back a little bit here, because there's another very popular stock that I was speaking about heavily in the back half of 2022. And that stock's name was Meta. And I did several videos in regards to Meta, especially in that kind of Q4 2022 timeframe, because I was just throwing money in Meta left and right, like $10,000 here, $50,000 here. It was a lot of money just being thrown in that stock, right? And I posted this short, and I just spent $10,000 on Meta stock during the crash today. What was the sentiment around there? Well, let me read you the comments, okay? Nothing like being bullish for Meta while using TikTok. Oh gosh. This sounds like a repeat of your GoPro investment. So now, oh my gosh. Yeah, they were throwing Meta into GoPro category. Jeez. I mean, does it get much more bearish and poor sentiment than that? This person says, I hope this works out for you. For myself, I wouldn't touch Meta with a 10-foot pole. They're doing some dumb stuff over there, like spending billions on stock buybacks while they lose billions on the metaverse nonsense. No way I'd buy at even these prices. Meta was around $100 roughly at that particular time frame, okay? So around 100, stocks are around 500 now at this point in time. The current PE means nothing, as earnings next year could easily be 0. Oh my gosh. They were saying Meta earnings could be 0 in 2023. Man, was that a bad... And 7 people thumbed that comment up. They thought, yeah, Meta's earnings could be 0 next year. Wow. Darn, I almost bought Meta under $100 today. Now I have to wait since you bought it. You missed out, buddy. You missed out. Good for you. This person says, buy the dip, but the dip keeps dipping. Yeah, it did keep dipping. Remember MySpace? They were pretty big at one point too. Yeah, that was comparisons. Everybody was saying MySpace this, MySpace that. Oh my gosh. Don't you get tired of giving people bad advice for your profit? Oh man. I'm just trying to share my opinion. Oh man. Casino, you all lose. Facebook will be the next MySpace. Whew, talk about aged poorly. It's been an awful, and by the way, that Facebook's will be the next MySpace. They've been saying that for over 10 years now. Literally over 10 years I've been hearing that. It's been an awful year for this investor. He's trying to talk up his Meta position he's been holding longer term, a used car salesman. How'd that go for you? I think Meta is done. Besides the advertising, the business is a complete joke. Metaverse, laugh out loud. Jeez. Then I recorded this video. I just spent $77,000 on one stock in 7 minutes, and this was in regards to Meta. This was, pretty close to Meta being at the lows. And in terms of the commentary there, I bought about $15,000 in Meta stock today. Now that I hear Jeremy's talking it up, I'll probably sell it based on how most of his stocks have gone this year. Yeah, 2022 was a horrible year for me. It was. Guess what year has been horrible for me in the last 7-8 years? Other than 2022. None. Am I going to have a bad year once out of every 10 years or 2 out of every 10 years? Sure. I'll have a bad one. But 8 out of 10 years are going to be flipping, flapjacking phenomenal for me. 2019 was great for me. 2020 was great for me. 2021 was actually an all-time year for me. 2022 was garbage for me. 2023 was great for me. 2024, guess what? It's probably going to be a great year for me. And so, now if you want to judge me on 1 year, go ahead. Yeah, 2022 was trash. It sucked. Boo, 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 2022. But, you should never make your decisions based upon another person. That guy sells his Meta shares, and man, I bet you he wish he had those Meta shares today, doesn't he? Woo! The time to buy Meta was 10 years ago during the start of its growth. Not now. Value trap that doesn't pay a dividend and buybacks will be restricted. Wrong. Man, I admire you because you take the risk that I would never do, but I understand you'll need a DCA into your position. Meta seems to have no bottom. I need to see signs of recovery to nibble in. Yeah, problem is Meta started going up so rapidly shortly after this that a lot of people never got in. It started going up so quickly that people are like, it's going to come back down. It's going to come back down. They never got the position ever built. And then they just missed out on hundreds and hundreds. I mean, Meta was $88. And now it's pushing close to 500. So you missed out on, literally hundreds of % gain in not in a quick amount of time, a matter of 12 to 18 months. Year 2060, people will be looking at these videos to study Jeremy's strategies. They do it today, not in 2060, but yeah, 100%. If you're buying Meta right now, you're betting on Zuck executing on the metaverse. He's good at identifying trends, but I would argue most of his success is from acquiring new platforms. Could be a good bet, but I definitely think it's a bet at this point. Now, so many people got caught up in the metaverse. And why did they get caught up in the metaverse? Because of media. The media kept talking about metaverse. And so people start all of a sudden getting clouded. They think like the metaverse has to work or this company's never. No. The company just ran from 88 to nearly 500. And guess what? Metaverse hasn't worked. So if you thought, in order for Meta stock to ever go up again, it needs metaverse, that was 100% wrong. It never needed that. That's what I try to explain to people. The metaverse opportunity is just a call option here. It's just a call option. If it works, huge, great. It's the next multi-$100 billion, if not trillion-dollar, multi-trillion opportunity. Great. But they don't need that. That's just a cherry on top. And I try to explain that over and over and over again in those videos, but just people's mindsets get caught up into whatever is being talked about at that time, and everybody just kept talking about the spend and metaverse, right? This person said, Jeremy's going to end up being right about 80% of his portfolio, and he's going to make a lot of money. They nailed it. 100%. 100%, right? And now, sitting on $638,000 in gains in Meta. And don't be surprised if eventually that number's $1 million plus in just gains, profits on that Meta position, right? In the public count. Along with the 293 in Tesla, 166 in ELF, 86,000 in Palantir, 65,000 in Amazing's on, right? Now, in regards to PayPal, we'll see. We'll see. Maybe I'm wrong about this one. Maybe it's not what I think it's going to be. And I have money in this over the next few years, and it's just dead money and never goes anywhere. It goes down, and I lose money and I have to sell it for a loss. It's certainly possible. And that's a risk I'm always willing to accept. Whenever I invest in a company, sometimes it's not going to work. And what I thought was going to work going in, it doesn't work. And I'm like, dang, I missed it. It could be. Say it's the next Chef or GoPro. That's just stupid. That's just dumb talk. That's the best way I could put that. That's just not intelligent. It's very low IQ type thought processes, right? Which some people are low IQ, so that's fine. Here's the facts around PayPal in its latest quarters. 15% total payment volume growth. And now these are GAAP numbers, generally accepted accounting principles. You can't choose what you want to include and not include in this. 9% revenue growth, 39% operating income growth, operating margin expanded 468 basis points, 52% net income growth, 61% earnings per diluted share growth, and net cash provided by operating activities was up 64% year over year. So, when you look at the facts versus the opinion, the sentiment, you have a very large divergence here, folks. Okay? And it's one of the largest divergences I've really seen. So, once again, we'll see. I may be wrong on it. Maybe it's 2 years in the future, 3 years in the future, and I'm selling PayPal at a loss. I'm like, dang, man. Can't believe it. Missed it. Thought PayPal was stealing money at $60. Now I'm selling at $30. It's possible. But it's also very possible that it's a $150 stock in 3 years. So we'll see. We'll see. All right, let's talk a little real estate, and then we'll talk hedging and hedges in general, okay? So I thought it was worth mentioning real estate because there's a view that as the real estate market goes, the economy goes, the stock market goes, the whole show, right? So we have some not such great things going on in real estate right now, okay? Mortgage rates have started, keyword is started, to tick back up now at this point in time, okay? Now, we'll see where they go from here, but we don't really want to see, if you want the housing market to improve, you do not want to see mortgage rates steepen as we get closer to spring. Because we know the spring selling season is everything. March, April, May. Huge, right? March, April, May. Always massive selling season for real estate. And so if mortgage rates continue to creep up as we go into spring, it's going to potentially make the real estate market a little cold this spring. Let's put it that way, right? Now, in terms of existing home sales, guys, it really hasn't improved yet. Home sales are horrible. I mean, absolutely horrible. I mean, we're way under where we were when the Rona crash was going on, right? I mean, this is just awful. Awful, awful. So this is not improved yet, which means, we can't really call bottom on housing market yet. Until that sustainably goes up for a bit, you can't really call a bottom here, folks, okay? So existing home sales is still horrible. The big beast over by me here, okay, it looks like it's pending. So finally, it looks like they might be moving that one. We'll see. But I've been kind of keeping an eye on that and a few other luxury properties just to try to see, what's going on in the luxury home market. Are those buyers stepping in? Very interested to see if this does go through, in what price does it go through at. So that should be interesting. Now, if I look at my city here, housing inventory is crap. I mean, it's crap here. It is still so low. It had spiked up there for a little bit and then just straight back down. And so the issue, what I'm finding, is just people still don't really want to list because they are locked in at their low mortgage rates. They view it as no reason to go sell right now because they're like, why would I sell my 3% mortgage to go jump in a 6 or 7% mortgage? So yeah, man, it's just dead out there in terms of inventory. And, I would love to buy another investment property at some point in time, but there's not inventory. There's nothing out there, man. There's just nothing. And so that continues to be an issue. Now, at some point in time, if the Fed lowers rates enough and mortgage rates go down enough, the inventory could spike huge. Now, when inventory spike huge, that could cause actually prices to lower. You might think, okay, mortgage rates go down a bunch, that's going to be hugely bullish for real estate. It doesn't mean it could be, guys. It could mean prices go down massively. Look at the great financial crisis. Inventory piled to the sky. And mortgage rates were, down to the lowest they'd been in, probably ever at that point in time. And did it mean great things for the real estate market? No. and been devastation for years for the real estate market. So that's just a little food for thought in regards to that whole situation, right? I was also looking at my market here in Vegas, and I was trying to see median days on market, and it does look like that is starting to climb quite considerably as well. So if inventory ever does spike up, meanwhile homes aren't really moving that fast, that's not going to be the best situation out there, right? Now, also what Bostic said today I think matters, and I reacted to a bunch of different videos, like 4 different videos on my reaction channel today, Jeremy Lefebvre Makes Money, which, by the way, if you haven't subscribed over there, you might want to subscribe over there. I'm always reacting to different content and things like that out there, right? But Bostic says, he's kind of thinking maybe lower rates like twice this year. And Raphael Bostic is pretty, I would say pretty important in the Fed area. Let's just call it that, okay? And so he's talking about 2, maybe 3 times they lower this year, which means mortgage rates are probably going to be very elevated this entire year, which means it could be a very tough year again in the real estate market. So don't get too excited about, real estate coming back anytime soon, just to be quite frank, okay? Now let's talk about some of the best stocks to hedge against in kind of my personal opinion and kind of my views out there, okay? First one up is in relation to housing. I like Toll Brothers as a hedge. The stock's really had a blow off top. It's pretty much at about all-time highs right now. Now, the thing with the Toll Brothers is if inventory ever starts going back up in a substantial way, it's going to hurt the home builders substantially. The only reason the home builders have gotten a pass and why those stocks have all had blow off tops is these particular stocks they haven't had competition to deal with. They haven't, if there's no existing inventory out there, then if somebody is in the market for a home, they go buy a new home. And so Toll Brothers has just been in a really good sweet spot. And that goes for all the home builders, to be quite frank. I don't think that lasts forever, though, right? At some point in time, inventory is going to hit the market. And next thing you know, a person's going to go out there to buy a home. And there's going to be 10, 15, 20 realistic options for them, like it used to be. And suddenly it's going to be like, wow, I don't necessarily need to go buy a new home. That's just one of many options out there, right? And so that's going to happen at some point in time, and that's not going to be good for the home builders. And at the same time, not a lot of people really want to be in these home builders because if you have a view that a recession could be coming, you don't want to be in the home builders. If you're in a view that the Fed's going to lower rates a bunch, well, you don't really want to be in home builders either. And because all of a sudden inventory is going to likely spike because then a lot of people are going to be moving around, which isn't necessarily bullish for the home builders because then their advantage they had goes away. So I don't know. I think that one's a pretty intriguing one out there. Polaris, I'm out of my Polaris hedge. I took massive profits there, but that one could potentially still be an interesting hedge. But excuse me, for Polaris, you need more. If unemployment spikes in any major way, that would definitely hurt Polaris quite substantially. So, I think that's a potential hedge there. Chipotle's had really a massive blow off top recently. Its PE's all the way up to 59 P ratio for the burrito chain. There's a lot of things that could go wrong there in 2024 for that company, including they have so many stores in California. Wages have gone up considerably, forced wage increases in regards to California with minimum wage. That obviously is going to affect a company like Chipotle in a pretty substantial way. And so, we'll see. But, the way I always think about my hedges, they're just insurance. If things go bad, these are the type of stocks that will tank. If you tell me that S&P 500 tanks 20%, these are the type of stocks that get wrecked in that market, okay? High valuation names like this, tough. Stocks that have bad blow-off tops, those are usually stocks that get hit the hardest because those ones haven't felt any selling pressure. It's just been buying, so much buying pressure. That's how they keep going up and up and up. But if all of a sudden you get a big market downturn, those ones can many times get hit the hardest. So that's why I look at it insurance. And it's sweet when I can make profits. I made great profits on my Tesla hedge, great profits on my Polaris hedge. Like anytime I can make profits from insurance, that's like the most beautiful thing in the world, man. Absolutely incredible. The other most beautiful thing is joining me on Twitch, which will be on Wednesday. That live stream is going to be crazy, folks, okay? I'll have that as one of the pinned comments down there. The second pinned comment I'll have down there is to join my Patreon if you want to support my content, plus be able to see the stocks I'm buying this week, plus get access to that particular Discord chat. Then go ahead and check out the second pinned comment down there. I have my Twitch and I'll have my Patreon on there. Much love and have a great day.